Okay, today we're going to do the section 2, source and recording. The first chapter for the section 2 is the double entry system of the bookkeeping. The syllabus requires us to know how to do the debit and credit, and using the information, the accounting data we have, record debit, credit, and prepare the T account. Ledger is a T account. Post the transaction to the ledger. From the, we're going to learn different type of the ledger in future. Balance ledger account as required and make transfer to the financial statement. This is normally happen in the year end. We will do it. Balance of the account and transfer to income statement. What is the double entry system? First, we need to know what is the effect when we use the accounting equation. The accounting equation in the section 1 that we have learned. Accounting equation saying that asset equal capital plus the liability. So using this double entry concept, we will know that asset, when it's debit, it will increase the asset value. When it's a credit, it will decrease the value. Liability, debit decrease, credit is increase. For capital and the liability have the same direction, which is both are the same. Debit decrease, credit increase. So bookkeeping means that we will use a lot of T account to present. When the one side debit, the other side must be credit. There's a bookkeeping double entry system, which is the asset liability accounting equation also applying the same. Okay. Next is this one. You can refer to your notes. Next is that how do we record the entry in the accounting using the source that we have. For example, in the question in here, we have the goods purchased for cash or check. We use the money to go and buy the goods. Goods purchased means that physical item you buy, you intend to sell it. Goods purchased on credit. Here is cash and check. That means use a cash or check to buy. Here is on credit. On credit means that we take the goods, but we didn't pay the money yet. Goods sold. Sold means that giving out. Giving out in order to get the money in. So this is a cash receive money or bank account receive money. Goods sold means sales account. When we saw the word goods sold, sales account in our double entry system. Goods purchased means that purchases account in our double entry system. Goods sold on credit. On credit means that we sell to somebody, but we didn't get the money immediately. In terms of the double entry, take notes that how we're going to read the account. This is the called account header. When account header is in the debit side, means that receive. Okay, in the debit side is called receive. Receive cash, receive goods, receive anything, so long as this account cash receive money. From where? From the sales, from the goods sold. How much of it? 200. That is how we see the double entry. So debit, cash, when we read, we say debit, cash, credit, sales. So the sales is appear in here in the credit side. So double entry read from the header point of view. Debit, cash, credit, sales. If we sell without getting the money, means that on credit. Sold goods on credit. Who received? Trade receivable received. Trade receivable here is a customer. In accounting, we didn't call customer, we call trade receivable. Business, we call customer. So debit trade receivable and credit the sales. The header that we read, but the detail is the opposite of the account. That is how we do the recording. So take notes that when we read the account debit credit, we read the account header. This is called account header. So we read from the account header point of view. If we have the goods purchase, when we purchase, use the cash to buy. That means cash account giving out money. This credit side is a giving out. This side is a receiving. Okay, so this credit means that we take the cash, go and buy the goods. So this credit purchases account will be debit. Debit purchases, credit the cash. If we buy the goods but we didn't pay immediately, that means we purchase on credit. Purchase on credit means that debit purchases account, credit trade payable. Trade payable in the business term we call supplier. So clear with the debit credit? Now let's move on. When we prepare the ledger or the so-called T account, we need to balance off the account. If the account is belong to the statement of financial position, which is the asset account, liability account, or capital account. In the asset, we have non-current asset, current asset. Liability, we have non-current liability and current liability. This is a section in the statement of financial position. Balance off should normally we have the balance carried out, balance brought down. So how are we going to read this account from the transaction in here? Because sometimes in the exam, they give us the T account, all the detail, but they ask us to describe the transaction in this. For example, this is a bank account. In the debit side, January 1st, balance brought down 50,000. What does it mean? This is that the balance of money in the bank at beginning of the month. So this is the month debit. On the second, we in the detail column, we have sales, 10,000. What is the transaction for? Sold goods and received check. So this is the goods that we sold, sales. In here, we have 17, trade receivable, 4,000. So receive payment from credit customer by credit transfer. Customer use the online banking, transfer money to us. So it's go through the bank account. So bank receive money, customer giving out the money. In here, credit side, motor vehicle detail means that we purchase of motor vehicle using the check or using online transfer, so long as it's a banking transaction. On 7, purchases. These purchases refer purchase of the goods. So this is purchases. We didn't write goods account. We don't have the goods account, but we write purchases. In here, we have the cash. This is a withdraw cash from bank account for business use. That means this is something like we call contra entry. You will learn it contra in future in the bank statement, bank reconciliation statement topic. Rent and rate. Rent and rate means that rental that we pay. Rate is like a license that we pay. Some pay by yearly, most of it is by yearly, the rent and the rate. Rent is normally by month. So this transaction showing that on the 18th, we pay rent and rate. Maybe we use online transfer. Once it's online transfer, we'll go to the bank account. On the 21st, wages credit 1,000. Pay wages by check means give salary to the worker. On 23rd, drawing. The moment you saw the drawing, this is withdraw money from the bank for personal use. The keyword is for personal use, not business use. End of the month, we have to calculate the subtotal in the debit and credit. If the debit more than the credit, this is a credit, debit more than the credit, we will have a balance carried out in the credit side, and balance brought down must be complete one set. If the carried out end of the year is end of the month is in the credit side, this is show is a current asset, and this is a current asset. So this is an asset to the business. That means we still have 16,300 in the end of the month. Is our money. Okay, let's continue. Division of ledger. We have few ledger that we need to learn. Sales ledger, purchases ledger, general ledger, cash book, petty cash book. Sales ledger, all these are, we call it specific ledger because it's only for certain certain account we put into here. Sales ledger only for the credit customer. Purchases ledger only for the credit supplier. Both must have the name as in the account header. Cash book is a money in out in the cash or in the bank account. Petty cash book is a small payment using the cash. Other than these four items, these four group, the rest of the account will put under the general or nominal ledger. Sales ledger, what is the sales ledger? Just like I mentioned about it. Sales ledger is a personal account of credit, customer, or trade receivable. Must have customer name. Like example here, Ronnie. Ronnie must be the name on top. In terms of the T account, trade receivable is a current asset. So we expected balance brought down in the debit side. Because this is amount that we can chase Ronnie to pay us in future. The detail in the debit is standard. Sales, interest received. If you have this on the check, bank. Credit side have sales return, bank or cash, discount allowed. Irrecoverable debt. This one is the money confirmed cannot receive in future. It's a loss to the business. So all the item in detail column, please try to memorize for the sales ledger or trade receivable account, because debit side and the credit side, the detail are fixed. In the exam, the change only the date and the value. The detail normally will not change, are the same. Okay, next one. Purchases ledger. Purchases ledger is to record credit supplier, which is trade payable. Also same thing, must have the supplier name. For example, ABC Limited account. Same thing, the detail, debit and credit are fixed. In the credit, balance brought down in the credit side. I mean, this is a current liability. We are owing, the business owing to the ABC Limited. Credit side, purchases. So here we have the purchases, debit purchases, credit ABC. That means ABC giving out the goods. Credit side is a giving out. Okay, giving out. And then debit side is a receiving. So that is a rule for the accounting. Now, here ABC giving out the goods, purchases receiving the goods. Interest charge, ABC charge the business. Interest charge in the debit side become expenses. Purchases return is always opposite to the purchases. So purchases return means that ABC receive the goods returned from the customer. Here we pay the ABC, ABC receive money. Discount received is given by the ABC. So in another way is that this is a income to the business. This is a other income to business. Okay, so balance carry down in here means this is a current liability. Carry down, brought down must be always complete set because the mark is given in here. Okay, next, move on. General ledger or nominal. There are many of it in this ledger. One of it, like example, capital. So it could be the expenses account. It could be the income account. It could be the asset account. It could be liability. It could be capital section account. So there is a many account in general or nominal ledger. So this is one example, capital account. So for capital, balance brought down must be in the credit side. Profit for the year, if you have additional capital, is in the credit side. Drawing, reduce the capital debit. If you have losses in the business, it will be in the debit. Balance carry down, balance brought down. And come to the date. Beginning year, end of the year. So following is following year, beginning of the year again. So in this one is the account other than sales ledger, purchases ledger, cash flow contain asset, liability, capital, income, and expenses. Contain real account and nominal account. Real accounts such as asset account, nominal account refer to expenses, income, and capital. Let's continue. Cash flow. So we were going to learn the cash flow in detail in the future. Okay, cash book perform two roles. One of it is the ledger, and you're going to learn the book of prime entry in next few topics. In the section 2, book of prime entry. So this book, cash book, have two jobs. One job is as a T account, another is as a book of prime entry. Why this is T account? If you really look into it, this is like a big T. This is like a big T. So that's why we call this is a ledger, because ledger means also performing that receiving, credit, debit concept. So here debit, here will be credit. Debit means that receive. So you just need to stand on the cash account or bank account, think about receive the money. In credit, think about giving out the money. Come to the preparation of the cash book. The subtotal. For this 3 column, this is called 3 column cash book. Discount column don't need to be the same. But for the cash and bank, this one must be the same. Must be the same. Debit, credit must be same. Then after that, the differences will be the balance carried out. In the detail form, what we have in here, it will go to the exercise, then you will take notes about it. Okay, next continue. Petty cash book. Same thing, petty cash book also perform 2 roles. One is a ledger, one is a book of prime entry. So what is a book of prime entry? We're going to learn in the following chapter. So, T account, slightly different a bit. This T is here is a debit. And this side, all are considered credit. The column in here, this credit, extended into many columns because this one is the analysis. We call analysis column. Analysis column means that end of the month, we just need to transfer the total to the general ledger. This is for the postage, stationery, all these individual account. End of the month total will transfer to general ledger. Whereas this column, the ledger account, this ledger is going to transfer to the purchases ledger when there is a transaction on the supplier. We will do on the actual date. So carry down, brought down are the same concept like other T account. Okay, this is what I want to share with you. So basically, this is for this topic. Okay, so we will do the exercise, then you will know more how to do the T account or the ledger debit credit concept. So we end here.